Good day, ladies and gentlemen. Narko speaking. Welcome to chapter 2 of the free live webinar hosted by the one and only Narko. Okay, so in chapter 2, we're going to cover order blocks. Okay, so now starting off with the textbook example for order blocks. So now what are or is order blocks? Okay, so an order block is the last candlestick found in a bullish trend or a bearish trend within the market. Okay, why the last candlestick found in the bullish trend or a bearish trend? Okay, because price in a bearish trend like this textbook example here, the last candlestick here will be the lowest point within your premium and discount pricing. Okay, for instance, let me just do this. Okay, so if this is your premium and discount, whereby your premium discount is found with above your fib here, and now your discount is found below your fib here, and in the middle of your fib it's going to be this here will be your equilibrium. This here will be your equilibrium. Okay, so here in the middle will be your equilibrium pricing. Okay, so now since we in a bullish trend, we're looking for buying opportunities, meaning that in a bullish trend we're only taking buying opportunities. Why are we taking buying opportunities? We're taking buying opportunities because we're looking for our higher lows to be respected, so we can enter off our last selling candlestick here, and to take profit at our week high here, as I explained in the previous chapter, that in a bullish trend we have our higher lows, our higher highs here, and our higher lows, So now we're looking for our higher lows to be respected, and when our higher lows is respected, our higher, we're looking to violate our previous higher high. Okay, so now when we're taking our trades at our lowest point here, which is the discounted price of our bullish trend here, we're looking to take profit at our previous lower low. Okay, so now another thing that is crucial to know is that in a bullish trend here, we only taking buying opportunities at our discounted area. Within our discounted area, meaning that it's below our equilibrium. Why are we not taking price at our premium area is that for example, in a real life example is that obviously as us as people, we only want to buy something when it's discounted and not premium. So when something is expensive, you don't want to buy something that's expensive. You only want to buy something that is discounted, meaning that it's cheaper. Okay, so it happens within price here that within our bullish trend, we only taking our buying opportunities at our discounted area here. Okay, so now order blocks. This here will be your order block, meaning that it's the last candle, the last selling candlestick, or the last candlestick within your bullish trend. And here you'll find it again, whereby it's the last candlestick within your bullish trend. Price will respect it and push to the upside. Okay. And once price respects your order block, it will create your higher lows. And your higher lows will push price to the upside to violate your previous higher highs. Okay. So now let's move on to the real market example, which is here. Okay, so ladies and gentlemen, here we have Euro AUD on the daily time frame. As you can see here, Euro AUD has been in a beautiful bearish trend. I mean a beautiful bullish trend, whereby it's creating higher highs and respecting our higher lows. Okay, so starting off here, let me just do this. Starting off here, you can see here that we have our break of structure here, our top break of structure here, and we can see that price is currently ranging between this low and this high here. So this here is this here will be our higher low, and this here will be our higher high. So now since we're in a bullish trend, we looking to take in our buying opportunities here at our order block here to push price to the upside and violate our previous high here, which is our take profit. Okay, so now let's play price and see what happens. So as you can see there, price taps into our order block. So here, you'll be taking your trade and looking to take your profit at your previous high here. Okay, so as you can see, price eventually pushes to the upside and violates our previous sorry, our previous higher high here. Okay, so now moving on, we have a new break of structure here and a new high and low. So this here will be our new break of structure. And here we have a new higher low, and we can see that price is currently ranging between this high here, and this low here. Okay, so now we'll be looking to taking our trades here at this low here, the last candlestick, to push price to the upside. Okay, let's play price and see. Okay, as you can see there, price eventually pushes moves to the upside. So now let's just wait for the initial pullback. Okay, so as you can see now, price is ranging between this high here and this low here. And now we're looking to taking our trades here at our order block. Okay, our last selling candlestick on a bullish trend. Okay, so let's play price and see. As you can see, price taps into our order block, and now we are looking forward to taking our profits here at our previous higher high. Our previous higher high. Okay, so as you can see, their price eventually uh, violates our previous higher high, and now we have a new higher low and a new higher high here. And since our previous higher high was violated, this can be considered as a break of structure here. Okay, so moving onwards, since now we have this new higher high here and a new higher low here, we can see that price is ranging between this high and this low here. So now we looking forward to price to respecting our order block here and pushing price to the upside. As you can see, price eventually taps into our order block there. And now we're looking to taking our profits at our week high here. At our week high, which is our previous higher high. So price eventually taps into our take profit, our take profit there, and creates a new higher high. Okay, a new higher low here. Okay, let's just pre-price and see if it closes with a candlestick body. So eventually there we get our break of structure. Okay, so our break of structure. And now we have our new strong, our new week high here. Wait, let's do this. So eventually now we get our new week high and our new our new strong low here. Okay, So do you guys have any questions on the theory of order blocks? Any questions? It's understandable. So I guess there are no questions. So let me just do a quick recap.
Nako, I have a question.
Okay.
So, okay, let's say in this instance, now you don't find your somewhere. Can you hear me?
Yeah, I can hear you, King.
Okay, let's say for this instance, you find your order block maybe before your higher low where your OP is located. Is there any specific thing that you would use to find your zone? Because you may find that maybe in a smaller time frame structure, your your OP in an uptrend won't be located exactly at your higher low, even though it broke two highs.
Okay, wait. Can you come again? I beg your pardon.
I'm saying,
Yeah,
I don't know, we're in an uptrend.
yeah.
So my question is there anything that you would use to locate your order block at your higher low? Because some some of the order blocks are not exactly at the higher low where you have like drawn your zones. Some of them may be a little bit above of the higher low. So is there anything specific you would use in order to locate those exact where price is gonna decrease and push
Okay, yeah.
upside?
So what you look for, like in this instance here, you can see that your order block will be the last selling candlestick before the push to the upside. So this push to the upside,
Yes.
it's the one that's going to confluence your order block.
What if price doesn't exactly come to the last selling candle?
Like
What happens
by
then?
exactly you mean this candlestick here,
Yeah. What if it doesn't exactly come to that order block?
and price like um just tens
Pushes to
above.
the upside.
Yeah, in just tens.
It's- Yeah, yeah.
Wait. But then as you can see here, even if we can use this order block here, this candlestick here, price tapped into it. But then what I can tell you is that an order block is the last selling candlestick before the push to the upside. As you can see here, this last selling candlestick, this last bearish candlestick here is the last one before the push to the upside, meaning that the next candlesticks are bullishly so. As you can see, they bullish here, and they're the ones that broke our previous higher high.
My question is, you see where your cursor is now, where you draw the exact zone of the order block,
Where my cursor
the
is
selling
here,
candle, and then yeah, where price tapped in and then pushed to the upside, like you said.
yeah.
What if price doesn't exactly come there where you drew your zoom? Then it comes maybe a little bit above it and then still pushes to the upside.
Or you asking like, what can you do?
Yeah, that's my question.
Yeah, okay. So what you can do is that you have to be like more reactive, because if price doesn't give you what you want, then you don't trade it. So for example, like I understand your question now. For example,
Mm.
you have this. You have this whereby price has this order block here, but then doesn't tap into your order block. Hence, but then it pushes to the upside and violates the previous high.
Yes,
That's your question,
yes,
right? So
yes.
if price doesn't tap into your order block, then don't like force trades or anything like that, because it didn't give you what you want. So when price violates the previous higher high, now you know that okay, now we have a new higher low here and a new higher high here. So for instance, maybe price is ranging here. You know that price is currently ranging between this high and this low here. So what you're going to do is you're going to look for your last selling candlestick here and look towards price tapping into it and pushing to the upside. That's what you can
So
do.
if it doesn't respect the other one, we just leave it behind and then move on with
Yeah,
the structure that price produces.
yeah. But then mind you, um, this here can also act as liquidity inducement trap. You see this low here, it can act as liquidity inducement trap. But then that's where like you implement liquidity and um whatnot. Okay. So price can do this here, leave imbalance here, leave imbalance within this range, and leave liquidity below this low here. Uh, Below this low. And why is this low liquidity? It's because that there is imbalance um, below it that needs to be filled. There is imbalance below this low that needs to be filled, and you find that price just turned right just below your equilibrium area. Hence why this here can be in a form of liquidity inducement trade. But then if price turns like in your extreme discounted area, now you can like ignore it and use the next higher low. And if there is no like imbalance below your previous higher low.
Okay, I understand. Okay.
I hope I'm not confusing you.
No, I'm not confused. It's making sense. It's making sense.
Okay. So I presume that I've answered your question.
Yeah, you have answered my question. We can continue.
Okay.
Anako, can I ask my question?
Yeah, you can ask King.
Um, is the way you analyze this pair on daily time frame, does it work exactly on smaller time frame, or there is different when analyzing in bigger time frame and smaller time frame?
Okay. Yes. Yes. Reason why I'm only using the higher time frame here is because things are more simpler on the higher time frame. if you can like jump into the lower time frame, it still happens the same. What you can do on the higher time frame, you can also do on the lower time frame. What happens on the higher time frame also happens on the lower time frame.
Okay, I get it. And my next question is, as you analyze this on daily time frame, so if we are to take on confirmation entry, what time frame is suitable for us to take it? The
Okay,
trade.
so confirmation entries differ because it will differ on and depend on your based on the time frame you're using for your analysis. So if you have for instance here you have analyzed on the daily time frame here, so your confirmation entries, you can look, let me just do this. You can look for your confirmation entries on your lower time frame depending on what price gives you. So if price doesn't give you what you want or doesn't give you a confirmation entries, don't trade because it didn't give you what you want. Okay, so let's just move to the lower time frame here, your 2-hour chart, and see what happens. I'm also going to like cover a chapter on this on confirmation entries. I think it's the next chapter, yeah. So as you can see here, price gave us a price tapped into our order block here on the higher time frame. So now looking for your confirmation entries, you would do this. Look for your break of structure here, and you're going to like look for a break of your previous lower high. A break of your previous lower high that will create a change of character. Okay, so now once it created a change of character, you'll be looking for price to push to the downside, to respect our change of character here and push to the upside. Okay, so let's see what price does. So for this instance, my order block will be here and at this supply area here. I mean this demand area here. So as you can see, the price just turned above my demand area and pushed to the upside. Okay, why did I use this demand area here? Because now, as you can see, it gave us a little bit of an imbalance here, and basically a demand area is a consolidation area whereby there's a lot of orders filled there. But then price eventually gave us a break of structure, change of character, and price respected our demand. Okay, didn't respect our demand area, but then it pushed to the upside. King, did I answer your question?
Yeah, it's well. Thank you.
Okay. So just right now I'll like cover a chapter on change of character and what you call confirmation entries. Okay. So and that's it for order blocks. So I'll end the session right now and send another link in the group for the third session.